Welcome to the Divorce Allies podcast, a podcast and video series where we dive into all things divorce. I'm Victoria McCooey. I am a high conflict divorce coach, and I'm here with Melissa Gragg, our financial mediator and business valuator. So today we're talking about the feeling you get. A lot of my clients come to me with this problem where when we talk about the finances, when they're in a negotiation or a mediation or maybe a four-way with lawyers, talking about the finances, they feel intimidated. They feel like they don't know enough about the actual numbers or how these vehicles work, how you split these kinds of assets to speak up. So this is what I wanted to talk to you about, Melissa, because you are the guru of all things numbers and valuation. When I have one of my clients who typically has been in a narcissistic relationship, which can be very abusive in an emotional way, like they treat you very condescendingly. They try to make you feel small, unworthy, stupid, incapable. So many times this shows up in the negotiation, right? They're actually trying to make you feel stupid about numbers so that you're intimidated to even put your 2 cents in. So what happens is a lot of times I see my clients just backing down and going, well, whatever they tell me, I have to believe because I don't have the resources to understand this. So what have you seen in your negotiations when the playing field isn't level that way?
Well, I think that you're going to see this show up. Intimidation is going to happen from not only your spouse, it's going to happen from the other parties, the other experts. They're going to happen with the attorneys, the judge, the mediator. Everybody is geared towards getting this settled, right? And getting it settled in a way that they're not necessarily involved. So they're hoping that the two of you figure things out, or you work with your attorneys and you work with a mediator. And so typically what they're doing is coming in with a whole bunch of stuff, right? And so they could be bringing in actual valuations or information, or they could just be coming into this situation to negotiate, especially if there's a mediator, with like a spreadsheet. And it could even be like handwritten, like a lot of attorneys still like to write it on a yellow pad, and they start to put, okay, the house, 300,000, the retirement, 200,000. Okay, if we split it, you're going to owe me this amount. All of that is, in my mind, a way to confuse you. But one of the things that you really have to understand is that almost nobody understands what I'm talking about when I come in for the business valuation. And they're not going to totally understand. And these are attorneys and judges that I've worked for decades that still don't understand these concepts. But what they do is they are quiet. And so they're not asking questions. They're not engaging, so when I'm presenting about the business valuation or I'm explaining it, they're just all sitting there. I totally understand. They do not, because in their mind, a question means you're ignorant. And what you have to know about attorneys is attorneys are typically, and this is their theory for trial. They typically will not ask you a question that they do not already know the answer to. And so think about that. In the settlement, they don't know the answer. They're not going to ask it. By not asking questions, we have this assumption that everybody understands. And that's not the case at all. Like, if anything, you should come into this knowing that you are on the same playing field with everybody else in the room, but they are going to talk over you, or they're going to try. I mean, that's a tactic that I would use. Like, if I confuse you and you don't ask questions, I clearly know that you're not getting it and you're just going along with whatever. I can now tell you anything and you're probably going to go along with it. And that's, I think, what people do. They're like, well, no one's asking questions. My attorney's not asking questions. The other attorney's not asking questions. The mediator's not asking questions.
So
well, everybody must understand it.
Up, right.
Yeah.
I'm going to look like the only stupid one in the room. So how have you seen women in particular who are not the the moneyed spouse in these negotiations, how have you seen them do it right?
Well, doing it right can be a couple things. We talk a lot about being prepared, but that's like 3 or 5 levels in. The very beginning is asking questions and then requesting the documentation or the proof or evidence. And you can call it whatever you want. But if somebody comes in and says, well, I think the house is worth $357,000. Well, that's a number that wasn't made up, or was it? Right. And so if you say, well, did you talk to somebody about that number? Did they put it in writing? Even somebody could send it in an email, right? But you want some sort of proof about what they said, and so you're always asking questions, but you're also going to pay attention to requesting documentation. And so what we say is, in mediation, your answer to are we settled is no at all times, until you, not your attorney, not your expert, you have enough information to make a decision about these things for your life. And so if everybody else understands it in the room, but you are still unclear, you should be asking questions, asking for more information, right? Like, well, he didn't provide the bank statements. There is a huge amount of information in the bank statements and in the credit card statements, because a lot of us charge everything. And so there's a record of what's happened, right? There's a record if the money leaves, the record if the money comes. And so a lot of times, instead of listening to everyone around you, ask the questions and get the documentation. It will expose if they just made up this number. Well, I just think that it's 437,000. And you're like, okay, but I thought it was 337. Oh no, now it's 437. Okay, then if you don't know the right number either, then you might want to agree to an expert, and that's going to cut costs and things like that. But you have to at least start that conversation. And mediation is a place where you can start to get a level playing ground so that you can ask those questions.
So I think the moral of that story is that when you're in a room and you are feeling intimidated because everybody is nodding their head and going, not to buy into that. They don't know any more than you do, chances are. Lawyers are not financial experts. And you're asking the question. They may even play along and roll their eyes and look at each other like, trying to feel superior, like, oh, she doesn't know what she's talking about. They are so happy you asked the question, because they can't do it. And they want to know the same answer that you do. So I think if you go in with that in your head, like, they just can't ask it, and I'm going to ask it, and they need to know as much as I do. If
You'll see them piggybacking on those questions, and that's your validation to be like, oh, everybody did ask questions. It's like in school. Nobody wants to be the kid. Nobody wants to be the one that's raising their hand. But again, in mediation, if you agree to something, the assumption is going to be that you had enough available information to make that agreement. And if you didn't, you have to speak up. And you don't have to speak up and be like, oh, show me this information. It can just be very simple. And you can be like, well, how is it possible that the house is worth 337,000 when we bought it for 400,000? We put 150,000 in. I would assume that it's at least 550. Now, what did I do? I didn't just talk from a number. I told the mediator we bought it at 400. We put $150,000 in. And so I think at least it's 550. Now you look up Zillow or Realtor or something like that, and it says 527. It makes sense of how you're logically doing it. Now, is that enough? If they say that, is that enough for you to be okay with it? For something like a house or collectibles or things like that, you might be able to say, okay, that makes sense, right? But now you have to determine, are you keeping it or are you leaving it? Because that could be how they structure the number and manipulate you with the number, because they're anticipating that they're going to keep that asset.
Yeah. So I just had a call this morning with a client in that exact same situation where one of the properties they own, the husband told her that his plan was to keep that one property and that he would get an appraisal. So she's telling me about that. And I said, well, you realize that an appraiser working for the person who wants a low valuation is going to skew it low. And she goes, oh, so should I tell him no, that I want to hire the appraiser so that I can? And I said, no, let him go get his own appraisal, right? Just let him do it. And now we're going to see what they come back with. Now you're going to make an educated determination of whether you need your own appraisal or not. If it seems valid to you and it's not worth the cost of another appraiser in your mind, then maybe that's fine. But now you've got information.
Your goal is to put together a settlement offer. So, and in order to get there, you need these preliminary values of the house, of the business, of equipment, of real, the farm, whatever it is. You have to pay for these. So if your spouse has access to all the money and wants to pay for these, absolutely the expert could be a little biased to your spouse, but you're putting a number in play, right? What you're doing is forcing them into a position. You're backing them into a corner to say what they are going to basically put out there as just a number on this particular asset. You can always hire another person to value that asset. But when you're looking at somebody to hire, you're wanting somebody that strategically is giving you kind of the best case, worst case scenario. And what they're doing is anticipating what the other side is going to look at. Like, okay, with the same house situation, we bought it for 400, we put 150 in, it's still a mess. It still needs more work. So it's not actually appreciating in value yet, right? With those types of situations, you could have another expert come in and give a different perspective if that number is off. Now, if they say, well, I don't think the number is 550, I think it's 400, and it's so far off, you would hire somebody to come in, because what you're hiring is an expert to testify. You're hiring an expert to position that number and to support that number in some capacity. If you can support it in mediation, then that's part of your offer. If they just give a number, you're at least starting to negotiate. If you have a number in your head, or you've done a preliminary and well, I know that the house is worth 550. You go into the negotiation very secure and confident in that number. And so when somebody says, well, no, it's 400, you're just like, no, I have proof. I have the evidence. I talked to a realtor. I talked to an appraiser. I have a preliminary value. It was we just refinanced it. It was appraised by the bank. Again, even bank appraisals are going to be a little bit biased. So if you know that there's going to be bias going into it, who cares, right?
It's so
Who
funny.
cares?
This reminds me of my own divorce so many years ago, because my ex-husband, who had a lot of narcissistic tendencies, was dead set in his mind. Our house, I'm just going to use real numbers, which I have eventually sold for like almost exactly $1 million. In his mind is worth $2.2 million, because if he did all of the things that he was planning on doing, which included a pool and a pool house and like all these major renovations and improvements, it would be, he was dead set, $2.2 million. But it wasn't there. It was in his head. And he had everyone convinced, because they're very convincing. They're very manipulative that way. They're so their fantasy is so real in their heads that they really believe that this is true. And he had the judge and the lawyers and everyone believing that I was underselling the house by $1 million. So obviously it finally came to light that this was, if there was $1 million of work put into the house, then it would be worth that. So,
Well, and this is where it becomes important that you understand if you have a true value. You understand that if there's manipulation in the numbers, then when you have a large asset like a house and you have another large asset like a business, the initial thought of everyone is like, well, if the house is a million, but the business is 2.2, I'm going to have to pay her out. If she's going to get the house and I have to pay her out. Oh, no, no, no. I'm not going to do that. So then they're like, well, I guess if the business is worth 2.2, let's have the house be worth 2.2 as well. And then you keep the house, I'll take the business, and we're off to the sunset. And that's how they can manipulate by basically they figure out the value of the house and then they back into the value of the business, and they don't have any other logical um, documentation. And because they're the business owner, they will by default, everybody will be like, well, I mean, surely you know what it's worth.
Right. Oh my God. So that leads us to this next topic, this other client that I was working with. So many times the woman is not the moneyed spouse, right? And this particular case, this husband had so many different businesses in the works, right? All over the world. It seemed very complex. And there was tons of money, lifestyle, very large. Yet he claimed that there was no value in any of these businesses. Everything was leveraged. And she's like, I have no exposure to any of this. I don't know anything. Uh, I'm just not going to get anything because I can't prove this is way above my pay grade. I don't know anything about these very complex businesses strewn all over the planet. How could I possibly come out okay here?
Okay, so you have two things at play right now. I need you to understand two things. When I go and value a business for strategic purposes, that means they're planning for the future. Every single business owner that I've pretty much ever dealt with believes that their business is worth more than it is, worth more than it truly is, right? In their head, they've just concocted this crazy dreams, right? And that's why they're an entrepreneur. That's why they're a visionary. When they go to get divorced, so the secondary thing that you have to realize is that most of the time you have multiple businesses for tax strategy. So you have an operating business that makes money and a real estate holding business that doesn't make money, and they net out to zero so you don't pay taxes. And so what happens is you start to believe what the tax return is saying. You start to believe that you're going to depreciate, at the end of the year, I'm going to go buy $500,000 worth of trucks and I'm going to depreciate them in that year. Right. And that's going to affect my taxes. So you have this sort of play in the business owner's mind of, I believe my value is worth so much money. Yet for tax purposes, we don't want to pay taxes. And a lot of times people are looking at those tax returns and they're just looking at the tax return. The front page of a business tax return is not the book income. It is the taxable income. You have to go a little bit deeper into the tax return to get to what actually is the reportable income on the books. And so in that capacity, if a business owner is just trying to match the house to the business, they're kind of thinking, well, okay, the value of the house is like 350,000. I totally think my business is worth $1 million. But the taxes kind of would imply that it's worth nothing. So let's just say it's worth nothing, but I will offer to exchange it for the house. So in those types of situations, you still have to request that they provide you with something that would verify that number for the valuation. And a lot of times they don't have anybody that they've talked to. A narcissist is not going to hire an expert. They think they're the expert. They're not going to allow their attorney a lot of leeway to work for them because they want to control the cost and the process. And so in this capacity, you're really saying, okay, well, if you think it's worth $1 million or 2.5 or 0, prove it. Now, if you tell me the business is worth 0, is there anything to prove? Right? Or should I'm just telling you it's worth 0. Now I'm pushing it to you to have to do something, because for the most part, if a business valuator comes in and says it's worth 0, we're not going to put that in writing. Like, I mean, we used to have an expert that always did nil reports. He would call them nil. So the business was nothing. But for the most part, that's just a ploy. I mean, that should be your initial red flag. The business is worth nothing. It's a red flag. And we had this with a client recently. They're like, well, how do we live in $1 million house if we make no income? It's called tax shelters. It's called creativity in the tax planning, but it doesn't equate to if you go and sell your business on the open market. Fair market value is a willing buyer, a willing seller. So you're going out to market and saying, what would somebody pay for? They're going to pay on cash flow. They're going to pay on profitability. They're going to pay on assets. They're going to pay on, what you have. They're going to look at a lot of things.
So let's bring this back to, here's this woman who has been disparaged during this relationship. She has been beaten down emotionally, psychologically. She's made to think she can't understand and is too stupid to wrap her brain around these complex structures. And now she's faced with this. Business is worth nothing. Yes, we live in a $3 million house, but the business makes no money. Has no value. I'm the business. How can she show up to a negotiation?
Well, the business is going to make cash flow. So the cash flow is either going to the person via salary, or it's going to the bottom line. Or what we also have to be careful of is, in businesses, we typically have personal expenses going through the business. Now, we call those discretionary items. And so even if the business doesn't have a lot of cash flow, it could be because they're putting every single expense in the business, and that's how they're getting it to have no cash flow. So it may be an adjustment that we would have to make. But typically, what I would say going into mediation, if you have a business owner spouse that is toxic, the odds are they're not going to do a lot of work going into mediation. They're just going to hope it works out. They're going to wing it. They're going to really hope that they can bully you into agreement. And so in that particular situation, if you want to be empowered, then you would have to do a preliminary valuation, and you would reach out to somebody and say, I just need a preliminary look. I just need some analyses. Like, can you see if this business is worth something or not? And it could still cost something to do that process. So you have to figure out, is it worth it? For the most part, it should be very clear. Like, if you're even questioning, is it worth it? Then it is. Because there's something in you that doesn't make sense how we have all the cash. So when you talk to, this is trusting your instinct kind of situation. So when we talk to people, typically they'll be like, well, I saw a statement once that said we had $1 million in the bank in our retirement, and I don't see that anymore. Well, I saw a business tax return that said that he made a lot of income. They see these little pieces. They give me cash, right? If you own a cash-based business, restaurants, car-based business, things like that, you might get cash. Well, they come and we had to do this repair with the house, and he handed me $10,000 of cash, right? You're going to have these things that just don't make sense of how we are broke, right? And so that in and of itself is your red flag enough to get a preliminary valuation. And then what you're going into is, if they say it's worth nothing, you anticipate that they're going to say it's worth nothing. You now have something that says that there is value there. And what they will then do is try to refute your value or try to disagree with your value. But again, if you're at 0 and I'm providing some value, then you have to give them 2 points of, the mediator has to say, okay, well, is it really 0 or is it somewhere between 0 and your number? And now you're negotiating between those two numbers.
Okay. So let's make up a scenario where this woman goes to her first mediation and this is what happens. It's worth nothing. You have to trust me. It's my business. I know what's going on. And she knows that can't be true. So she reaches out to you or some business valuator and says, I need a preliminary valuation of my husband's business. What do you need from her in order to accomplish that?
Yeah.
And how are we going to get it?
So I will go back to the mediation. So let's say we go into mediation and they come and say the business is worth nothing, but they have a lot of other things we have values to. Okay. And I don't have anything either because I don't have access to money. So what you're going to do in that mediation is either utilize the mediator to say, hey, are there any people that we can work with together? Can we hire a joint valuator, right? Can we do this? Can we work with an expert together? And that's going to be your first step because they're either going to say yes or no, right? Again, they can write the check or so you're going to first start there. Say, can we work together? Hey, mediator, do you know anybody? The mediator is going to be like, well, I don't know. The other side might say yes or no. They might say, yes, we know Bobby and Bobby does great valuation work. At that point, you say, fine. Unless you have somebody else that you know or me, you can call, but you basically say, fine, work with whomever. But if they're working jointly, there's going to be a communication protocol that they need to abide by, which is that both of you are their client. And so they're going to, like, what we do is we communicate with both parties. Like, you send me an email, I'm going to respond to the email and CC everyone who's included. And this could be your other advisors, right? But in that mediation, if we're like, we don't have a value, can we work together? Yes. Okay, great. Let's engage this person. You could even call them during the mediation, or somebody is the reference point of that communication now. And sometimes it might be you or it might be your spouse. So you kind of say, okay, we're going to hire this person as a joint mediator. If they say no, I don't want to work with you on this, then you say, okay, who are you going to hire to do this work? You would want to encourage them to hire somebody because, again, that expert's going to have access to the business owner. So if they say, well, I don't even want to, like, what's the point of doing this? I'm not going to do this. You're then going to say to the mediator, okay, I need $5,000 to go and hire somebody to value this business. Can we agree that he's going to transfer $5,000 or give me a check and write a check to this individual, and he's going to work with them to provide the documentation? So those are all best case scenarios, right?
So this is really helpful information because this is what you need to know before you even walk into that first mediation. What's your recourse, right? Now you know who you might hire if it's up to you, how much it should cost, how much money you're going to need to get for this, and what documents they're going to need to supply.
And for the most part, a valuation could cost like upwards of $25,000. Like, it's a crazy amount. And so realistically, you are trying to find somebody that works in the divorce mediation space, that understands that we don't need to go all the way through all of this complicated process or create a 100-page report, right? But you can go in having like maybe two names, like talk to your attorney or talk to other people or do your own research, right? Most experts are going to give you a complimentary first meeting. Attorneys may charge you, but the experts, it's in their best interest to make sure they can also provide the information that you have. So if you go into the mediation and you have like maybe two people, what if one of those people is the same name that the other side has? Because a mediator could be like, well, give me two people, you give me two people. If they're on the same list, then we're going to choose that person. Now, if they say, nope, I'm not going to do it, and you can get the money, then you need to go and get your preliminary valuation, and you need to know that they're probably going to then provide something to the other side so that they can be aware of how the value was determined. We also offer a 1-hour session that would explain the value to the mediator at that next mediation date. We also record the session and maybe make a 15 to 20 minute presentation just about the valuation, just recorded, that they can use to play during the mediation at the time that's most relevant for that information. So there's a lot of ways that you can cut costs. The problem is, and the thing that people get concerned about is like, well, I don't want to hire that expert, or I'm concerned about this. Most experts have a responsibility to their own craft to be doing decent work, right? And so, and if they don't do decent work, what they do is going to be red flags for another valuation person. So let's say the husband's like, no, I'm going to hire somebody. I got this. Give me a month. We'll come back. You want to set so that you have the next time that you're going to meet with that same mediator, right? So you talk to the valuation person. They say they'll have it in 2 weeks. Great. A month from now, you're going to go down and meet with the mediator. At the point that you are sitting back down again to meet with the mediator and you're providing this number and you're backing it up, one of two things is going to happen. They're either going to refute it and they're going to say that's incorrect, or if they go and do the valuation and they give it to you, you could just have somebody review it. And that doesn't cost a lot. Like we charge for a 90-minute session, $500, right? So for $500, you could have somebody review that, give you the red flags. And again, I'm going to see the red flags of how they manipulated the numbers, even if the rest of you don't. Now it's a he said, she said between the experts, which is not necessarily what you want to be in. But again, now you have this bookends, right? So you have a valuation over here, you have a valuation over here. What you have is that everybody's discussing and negotiating in a tight range, right? And so yes, there can be movement back and forth, but in a true negotiation, you want some movement, right? Because you okay, the value is $1 million. Like you might be willing to go down a little bit because you might find value in something else. Like it might be important for you to get the lake house or the land or something, and you would be willing to take a little bit less because those things may not have the same monetary value, but they're very important to you. It allows you to make those decisions, not just on dollars, but on actually what would be the best outcome for you personally.
So let's talk about how important it is to have some sort of a resource like the Divorce Allies, where all of these questions can get answered, because you just don't know what you don't know. Like now it all seems so doable, right? I know I don't have to be intimidated. I go in, oh, I don't understand cryptocurrency. I don't have to feel like I'm just a lame duck, right? They're just going to take advantage of me because I don't know what I'm talking about. We can have resources. We don't have to feel intimidated. We're not going to let them use those tactics to bulldoze through this negotiation and take advantage of us, right? We're going to be able to stand up for ourselves and get the right settlement offer on the table.
Absolutely. I mean, the Divorce Allies Circle is our, main weekly meeting. And so if we look at the Divorce Allies Circle, what we're doing is we're trying to mimic what you should be doing in your divorce case. And so one of the things that we recommend is you get a journal. And in that journal, you're going to write down all the questions. So as this divorce progresses, you're going to have questions that come in at 2 a.m. You're going to wake up in the middle of the night. You're going to be like, oh my gosh, what about this? Write them down in that journal. And then once a week, you're going to come to the Divorce Allies and you ask these questions. And you have those questions for a mortgage specialist or a high conflict divorce or a financial mediator or a forensic, like all of these things you have questions for, and it just might be one question, right? So the other way that you can do this is use those questions for your attorney, for your expert, for your other people that once a month, you go into your attorney and you're like, okay, here's a list of all the questions that I've cultivated over the month. Or you're going to spend a lot of money asking them a question via email. They're going to charge you for that 0.3 hour to email you back and look at that question. And and all they said was, that's not relevant, right? So they're going to charge you for every single piece. So the Divorce Allies is a way that not all questions, actually a majority of the questions in divorce are not legal questions. They're financial questions, they're emotional questions, they're coping questions. They're sometimes you just need somebody to listen. So a lot of times the circle is just a place where you can go to funnel and get information, get support, find your community. If it's not the Divorce Allies, find another divorce community, because the people that are around you are going to get tired of listening to you talk about it.
And they can give you really bad advice.
Yeah.
They've never been in this situation, probably. So
Unfortunately.
yeah, well-meaning family and friends can really give you bad advice. So we want you to be in the right container where you have the right experts to give you the right information right when you need it.
And
Well,
this is a marathon. I mean, and I think that that's what people have to realize, is that they think that they're going to hire an attorney, they're going to file for divorce, everybody's going to come and kumbaya and give you what you need, and you're going to walk away. And the reality is, if you are not thinking going into this that this is a 12 to 18 month process, you're probably going to be a lot let down. And so if you know that this is already going to be a process, how can you put some of these things forth first? How can you start to mentally prepare to be in a room to negotiate? How can you get confidence about what you know? How can you prep? Gaining confidence by preparing is key. Like if all of your ducks are in a row, you're going to walk in very confident to the negotiation because you've looked at it over and over and over through time. This isn't a cramming for a test. This is spending the whole semester making sure you study very well so that you ace the test at the end.
Yeah.
That's a very different strategy.
Yep. And I think also what we hit on today is having confidence even when there's something you don't know.
Absolutely.
And being willing to ask the questions and not caring about what energy they bring when you do that. Letting them roll their eyes, letting them do whatever. You have all the confidence and nothing can wear you down.
And one of the things that I think we're going to be talking about in the circle today is kind of key, is that for the most part, they're going to keep things from you. So they're going to delay and distract, and they're going to keep documents from you. So what do you have to do? You have to hire people that are more creative. You have to hire people that are going to extrapolate the information based on the information that you have. And only really financial people can extrapolate complex financial situations. And so I might be able to see a random number on a random document and extrapolate a value, extrapolate a cash flow, look at the expenses. I might be able to correlate. Well, let's look at the bank statement. Let's look at the tax return. Where are these not matching up? Where is the pattern broken? That could be manipulation. And so I'm exposing the manipulation. And sometimes we are kind of, I would say, coming up with a creative number based on the lack of information we have in order to get the other side to give us the information to correct us, to be like, oh, you definitely got that wrong. Here's the information. You need to get it right.
But you have to leave your ego at the door, right?
Yes. Absolutely. You have to be the dumb blonde.
Yes.
Sometimes you have to play dumb in this, but playing dumb and asking questions are two different things. Being dumb is sitting back and not being proactive. Asking questions, having a list of questions so that you don't have to, if you get nervous, you don't have to remember them. Having a list of the important issues, all of this is going to help you be able to be a little stressed in the situation and still accomplish what needs to happen.
So you don't have to be the expert at the business valuation or at cryptocurrency or at whatever it is that they are just keeping from you. You have to know where to go to get the right information.
Yeah, like a simple thing about crypto is that there's a public balance sheet of everybody's holdings of crypto. So you need to get the right key codes. You need to get the right information. Sometimes you have to ask the right questions and well, what is the EBITDA? Well, shoot, I don't even know what EBITDA is, right? Well, no one else does either. So the more you just educate yourself a little bit, like what is the cash flow or EBITDA? Well, EBITDA is cash flow. So that's like you're actually speaking, so if people are giving you the right information to talk about, this is something that you might have to be the champion of your own divorce. You have to be empowered because they're not going to remember all the nuances of your situation. They're not going to remember all the times that this person did something to you and need to rectify it. So you have to be capable and able to ask those questions and not have the default be, because again, do you know what your lawyer's thinking of while you're sitting there? Not you. What they're going to have for dinner, what their other cases are, what they're doing. This is just a job for them. This is your whole life. And so the more you know some of these words and some of these things to ask, that they have to respond to you. And what you're really doing is trying to get their response, because their response is going to tell you more information. And then you can pivot and do what you need to do to hire the right people.
Oh my God, this was so informative. I can't wait for all of our members to watch this workshop. It's on their workshop. It's so great that we've created this container for getting all these questions answered. Melissa, thank you so much for talking with me today. And we'll see you next time.
Awesome. See you soon.